Alright, folks. Welcome to this week's Forex commentary and market review. Last week we um, we talked about the possibility that we saw dollar index trade into this monthly fair value gap here, and kind of like mention a few things because ideally or primarily we want to see the dollar index trade higher. We're aiming for this gap here because market structure on the subordinate time frames and even market structure on monthly time frame, except for the fact that we haven't seen a closing basis below this consecutive downward candle to validate a change in state in delivery on the monthly time frame. But the commitment of traders report, the hedging program, COT hedging program, point out to the fact that DXY is bullish on the fundamental perspective. Okay, so because of this idea, we're leaning on the possibility that DXY possibly trades into this gap or leaves it open for a breakaway gap, and that was the whole premise for last week's commentary. And when we go through the weekly time frame, okay, we've been aiming for relatively equal highs for a while now, since I don't know, for weeks now, and market condition hasn't been ideal this year on the XY, and I am honestly hoping that next year is different because it makes work very very easy. It makes managing trades very very easy. It makes trusting setups very very easy. Okay, so DXY traded through this low here, and this, you can see this is a short-term low here, and we haven't engaged buy side liquidity here. So ideally we want to see this hold for a total soup, but if you look closely here, we still have a number of considerations to make. For example, markets are currently trading below this fair value gap here. You can see this gap market has traded through, and we're currently below this gap. So when the market opens next week, except if the market wants to quickly trade through this level, we might find resistance around this price point, and that's just something to note, something you want to put into consideration. So now that we have market meet objective here at the monthly fair value gap, what do I think dollar index is going to do this week? Well, I think we might be bullish, okay, because we're currently in a monthly level traded into this weekly order block here, but I'm still going to lean on the architecture of next week's range to unfold, because I need to be sure that we want to go higher on DXY, because currently there's nothing on the weekly time frame that gives us bullish, except for the fact that we're at key level, which is the monthly fair value gap, and the weekly order block haven't run a short-term low here. So we have the ingredients to frame a bullish setup on dollar index, but there's nothing on the weekly time frame except from levels that validates longs on dollar index. Say we had a strong rejection and maybe the market settled inside the range of this green candle, then that would easily mean bullish coupled with lower time frame market structure. Because when we go through lower time frame, daily time frame, you see after running sell side liquidity here, we are currently in consolidation. Okay, it's consolidation here. Okay, the markets is just back and forth here. So but if you go to the lower time frame, like the 4-hour time frame, you're gonna find something very interesting. At the point of, I think, at the close of Thursday's trading, I was looking at this from the change in the state in delivery in the 4-hour time frame, and I told myself that I wanted to go long on dollar index because I'm bullish on the XY. We've taken sell side here, and there was some daily gap above here. I was like, okay, I'll just buy it. But then again, I thought to myself that, okay, why not just hold on till next week and see how the market unfold, because it's really not about the change in state in delivery. Okay, the change in state in delivery makes sense, but you have to put into proper context. And I was finding it difficult to put into context because if you recall some prior weeks commentary, I was talking about how we have relatively equal lows here, and we wanted to see bullish DXY, which in fact we saw bullish DXY. And I was also talking about some clean levels here. So while we took our sell side here and we still have this clean level here, it just had me stuck for a bit. So I was finding it difficult to qualify longs here. So I just decided that okay, I'm going to wait for this week's trading, and I'm going to build up from Monday's close, and then we're going to find something. Because if this is a Taurus, which I anticipate this to be a false breaking market structure, we're going to see longs on dollar index from here, from sell side here. But I do not trust this price action yet. And that's the difference between myself and somebody who just comes into my YouTube. Someone thinks that once I see the change in state in delivery, I'm just going to lose all senses and just going. Like I said, it's a way to validate your weekly buys. And for you to approve of that validation, it means markets must have met certain criteria of the charts. Okay, and you can now take the trade. Because if you just take everything you see, then it's no more, you're losing sense of what a system is, and you're just subscribing to the idea of pattern trading, because that's the easiest thing for every person. Everyone prefers the pattern. Okay, once I see this, I just execute, because they don't want to go through the mental hustle of trying to think and put things into context. Now, let's talk a bit about last week's price action, because while we're talking about DXY could likely trade here, we also talked about the possibility that DXY could trade higher. And one of the things we said about DXY trading into sell side was we wanted to see DXY return into this fair value gap here. And when DXY returns into this gap, we wanted to see DXY return into sell side liquidity here. But on Monday, something interesting happened. Okay, DXY didn't trade inside this gap, but I promise you, if you study market structure intraday at key time of day, you're going to find setups that at least will take you into the rejection blocks here. But the funny thing is, you would want to see the market take out sell side, but they didn't take out sell side. And that actually prompted me into making a post online. Okay. All right. So I made this post on Monday. I said I can imagine going short in London and getting stopped out at even right now, simply because I wanted to hold for some relatively equal lows. I said, nah, this is some next level demonic price action on DXY, and I am not making this up. And that's the truth, because ideally I want to see DXY take out self side liquidity here. And if I engage in this setup on the lower time frame, I don't know if maybe I'll show what I would be looking at on the lower time frame. Okay, and I would want to hold my trades at least. In fact, I'm going to hold my trades to take out sell side, because this is like the obvious thing. I'll probably maybe put a take profit here, or I'll not be watching my charts. I'll just be doing something else, and I'll just return back, and I'll just probably see this candle, and it's going to be frustrating. Maybe once I see this candle, I'd have to close it, because now I would recall that we have a breakaway gap here, and you're going to use this rejection block to manipulate and stuff like that. And this kind of like sparked some interesting conversation here. I think yes, this this person asked. I think it was okay. It was the same day. It said if today's candle on DXY closed bearish, and we're able to get a far CSD, don't you think it will be wise to wait for another daily candle to close bullish before we can fully conclude that buyers are stepping in and stuff like that? While I understood the idea of what this person was saying, because we're bullish on dollar index, right? And if the markets were leaving those relatively equal lows, it only makes sense that you get an extra confirmation before you can go in bullish on DXY. Okay, and I said yes, it will be informed to do so. There's a strong likelihood that DXY still engages those lows into the monthly fair value gap. I mean, when you look at EU, she's looking to have some interest on the buy side, at the previous weekly highs. So the whole point I was trying to make is, regardless of what we were seeing on dollar index, after this rally, very close to relatively equal lows, that's what for me validated the weekly bias. Because when someone comes to my YouTube channel and says, okay, what does it mean by validation? I said when we started the week that we could see dollar index return into the monthly fair value gap. That's this relatively equal lows. And usually I'd say when the daily candle trades in line with the higher time frame buys, that's validation. So when we saw Monday's candle trade in the direction of the monthly bias or the monthly draw on liquidity, say the monthly draw on liquidity, not the monthly bias, because my monthly bias is bullish. The monthly draw on liquidity, this bearish candle closure, even if it had a very strong rejection here, okay, means validation to me. And the most interesting part is that on the 4 hour time frame, DXY was yet to return into this far fair value gap. I think this is the point of the video where I quickly say you like and share the video. And honestly, I do not like it because it pauses, the commentary, and but this is YouTube, and MK PhD has about 21 million subscribers, and whenever I'm watching his content, he says subscribe my YouTube channel, and I'm like, wow, that's very interesting. Anyways, so by this after the close of Monday's trading, okay, we already had DXY establish the weekly buys, which was trading very close to this relatively equal lows, but the markets left open a breakaway gap. So the idea in my head was, okay, fine, we have a breakaway gap. We're going to see what happens when the markets trade into this breakaway gap, and if I see a change in the state in delivery. Now, I wasn't looking for a 4 hour time frame change in state in delivery. Now, this is where the nuance is. Okay, I was looking for a 30 minutes time frame change state in delivery, or if we're trading below the new day opening gap at key time of day. And I have to pull up Twitter now, so we would have to go through all of this. So I think this was 1st of December. I got a message on 2nd of December, and I was talking about the fact that it's far easier to frame a buy setup intraday on EU than it would be on DXY. 4 hour time frame market structure is bullish, plus clean highs on the weekly time frame. So I said apparently, all right, I will only take seriously bullish price action at key time of day. Apparently, there's still some room for manipulation. I was talking about EU, still talking about dollar index, and he just seconded what I said, emphasis of key time of day. And I'm going to show you what the interesting thing about trading. So at the time when we were speaking, all right. So this was the point of our conversation on Twitter, because I think I would expect people to actually, ask me questions online, and that's the whole point of the Discord next year. I'm trying to set up, you know, a a website where I can have all of those payment channels and all of that, and that's what the Discord is for. This is an ad for someone who wants somebody to hold their hands. Like, I'm talking to this guy because not everyone is, I don't know, maybe they think there is an ulterior motive when I ask you to ask me questions online. Is for reasons like this. Because if he never asked this from me, I'll probably not have anything to discuss with you, and you will not be learning anything from the conversation I had with this person, right? And that's essentially what the Discord would be for, because we're just talking. Because if you spend the last 7, 10, 1 year with me, and you've seen the development in your trading just from YouTube commentaries, you can imagine if we do this thing on a daily basis. And it's literally for you, not for me. I'm definitely gonna make money from your subscription, definitely, but I think gonna be a profit for you than for me, because you're definitely gonna make. Okay, I'm not gonna say that. All right. So this was the point of our conversation online. I linked this tweet so that you'd see what I meant by there's still room for manipulation. I was thinking about the 4 hour time frame fair value gap on DXY, and while we were talking, we this was 2:53. That's London session. All right, that's key time in London session. So I was still expecting manipulation around this time, because you see some relatively equal highs here, and then there is this far inefficiency. So before you confirm things, okay, before you validate buys, there has to be a leaning on price and time. In this case, we're at time of day where I should be looking for setup on dollar index, okay, in London session, but the market hasn't met an obligation in price. That I wanted to see DXY return into the 4 hour gap, because if you left this fair value gap on the 4 hour time from open for a breakaway gap, and now markets were shy of objective and returned back, then I think you have every means of returning into this gap, then showing a shift in market structure. Okay, so currently around this time of day, there was a new day opening gap. We're currently above the new day opening gap, and I wanted to see manipulation on dollar index, and we had that, and this was New York session. Now the interesting thing was on Euro USD. Let's pull up Euro USD quickly, because something interesting happened to me in New York. So while we had our consolidation, this was London session, and we had our manipulation in London session. Okay, deeper into this gap, I thought that we could see the markets return into this relatively equal low, because this levels here were very clean. Okay, then the markets didn't in fact return into this relatively equal lows. So let me paste it here again. So there's still room for manipulation. Okay, I was thinking markets will return into relatively equal lows. Mind you, that is the relatively equal highs on dollar index. And when the markets traded lower here and broke higher, and on the 30 minutes time frame, there was a change in state in delivery here. I went long on Euro USD. I had my stop loss here. And do you know what happened? I got stopped out here. That was very interesting. And I was I was like, okay, so the market wants to take out this low. And I left the chart, and by the end of the day, market didn't take out this low, and there was a shift in market structure again, a change in standing delivery here. We can just see this down close candle here and this fair value gap. I missed this setup here. Then I went to the hourly time frame on Euro USD, and I saw that okay, fine, we have a gap here, and there was a fair value gap here, and I had to engage on Euro USD again here. Now, this is the point I'm trying to make here. You can do everything right in this market, and you're still going to take a loss. And somebody who is probably trying to be very, very correct, okay, would think maybe, oh, Euro USD isn't bullish and stuff like that, and you're going to completely miss out on the setup. But these are exactly the kind of thing that happen. Now, if you mind you, Euro USD never took out this low here. Now, Euro USD, so what was the point of the manipulation here? Sorry, is to take my money. That's the point of the manipulation. So apparently DXY returned back into the 4 hour gap, and DXY broke down again. And on the 4 hour time frame, DXY closed very bearish, and we had a 4 hour time frame change in state in delivery. Now someone will say, Settle, why don't you wait for a 4 hour time frame change state in delivery? At the time I engaged on dollar index, this 4 hour candle was trading below this consecutive up close candle, and on the lower time frame, that's the 30 minutes time frame, I think, and also the 45 minutes time frame, you can see all of this up close candle here we're trading below. So I felt like, okay, while we've met our objective in price on dollar index, and we have a change in state in delivery and a market structure shift on the 45 minutes time frame, I will just engage on DXY regardless. And I engaged, and I got stopped out, and market validated again, and I had to re-engage again. Okay, and the market just ran into sell side, which was very interesting. There's a lesson here to learn. is you can do everything and still take a loss. But it only makes sense if you're following your system. The truth is, most of the time when you have a system, it's probably designed to be maybe 70% efficient or 80% efficient under very good market conditions. That when you're not faced with conditions like this, because like I say, this condition is abysmal. I don't like this price action because you can absolutely, in fact, the losses I've taken in the past 6 weeks are losses that I wouldn't take in normal market condition. Stuff like this, I just get stopped out and the market runs. And this is after waiting for validation. Now, someone say, "Oh, why don't you wait for 4 hour time frame?" Like I said, Monday already traded bearish and closed bearish, so I don't need the 4 hour time frame to validate my weekly bias anymore because the daily time frame and 4 hour time frame has already validated that bias. Now, when markets trade into the 4 hour gap, the only thing I need is for the lower time frame, 15 minutes, 30 minutes, 30 minutes preferably, to shift in the direction of the weekly bias, and then I engage. That's all I need, and that's how I will continue to do it, right? Because over time and time again, now mind you, because I'm doing this based off of statistics, over time, if I wait for 4 hour time frame after I've seen validation on maybe the daily time frame or the 4 hour time frame, if I wait for it again, I'm likely to miss the trade. So the best way to engage is off of lower time frame, since I am trusting on the fact that Monday's trading into the rejection block here, into the rejection block here, already validated the high time frame bias. So I just have to trust, the logic in it and my technical analysis. See, if you try to investigate every losses you take, you're not going to trade because no matter what, you're still going to take losses. Think about it this way: you can do everything correctly and still take a loss. Do you know what that's supposed to teach you? It's supposed to teach you that you need to accept losses. You need to accept losses. I think that's what the point of this commentary. It's a little bit of psychology and how I went through last week. Okay, because you need to accept losses and you need to understand that you can always be wrong. So once you understand that you can always be wrong, then you would manage your risk appropriately and you would absolutely learn how to accept the outcome of every trade. So that was that's primarily my recap for last week. Bought Euro USD. They could have made it easy for me by just rallying, but Euro USD is doing Euro USD things. And the interesting thing is that they didn't engage here. And do you know what it means? This is an SMT between DXY and Euro USD. And what does it mean if this is an SMT? It means this run higher is a manipulation. Okay, because we ran higher again into this 4 hour time frame fair value gap, and it doesn't reflect on Euro USD. So it's a manipulation. And what happens when you're on a trade and the markets manipulate? You're definitely going to take a loss. That's the truth. So for this week on Euro USD, a couple weeks back, I was talking about this monthly gap on Euro USD. Okay, this fair value gap, and I said this is a draw on liquidity. And since we understood the draw on liquidity on Euro USD, and currently we're trading above previous monthly high, which is a shift in market structure, a bullish shift in market structure. I taught in qualitative analysis and in mentorship that each candlesticks is a condensed format for market structure. Okay, you can absolutely understand market structure by looking at candlesticks on the higher time frame. So here we have the markets print out a lower low with a lower high and a lower low, and apparently this market is creating a high high, which is not salient to a bearish market or a market that its high time frame draw on liquidity. It's for sell side. So currently we have markets trading above previous monthly high, which is a turtle soup. And if we transpose this to the weekly time frame, okay, you see we are currently trading above old weekly highs. And this was the level I was talking about, I think, how many weeks ago? That's 1, 2, 3, 4, a month ago. Sorry. Yeah. A month ago. Because I wanted to see Euro USD run up higher here because we had, this swing low here. This one that had a higher low to the right of it and higher low to the left of it. Now, this is how I learned price action. So we had a swing low here. Ideally, the markets were supposed to run into this high. But you know what the markets did? They trade into the previous weekly low. Now, if this was a draw on liquidity, it means the run below this low was actually a turtle soup. But the reason why in subsequent commentaries I can't call this a turtle soup is because the draw on liquidity actually on a much more higher time frame is what? Is sell side. So we're in a very, very confusing market. And that's the reason why when we see things like this, well, that's why we'd say, okay, we need to see for our time frame validate buys. We need to put all of the system in place so that it saves us for periods when we are likely to be wrong. Okay. Now, if I wanted to lean on the fact that the market has to and must trade into this high, I'll simply say, okay, when prices trades into this rejection block, I'm going to be bullish on Euro because this is a draw on liquidity. Because this was a draw on liquidity 4 weeks ago. But for a fact that we understand that there's a difference between draw on liquidity and, high time frame institutional order flow, it keeps, our analysis in check and we don't hold on to certain buys. Okay. And we trade or we analyze based off of what we see. And we trust in the fact that our systems would help us, in scenarios where we are likely to be wrong. Because in scenarios where we are likely to be wrong, we wouldn't find validation on the 4 hour time frame that is going to help us take a loss. All right, because there are about 2 reasons why you're going to take a loss. Probably you do dumb shit or you're absolutely wrong. And sometimes when you're wrong, it has 2 branches. You are probably right, but markets just takes from you. And the other scenario, you're just absolutely wrong on buys. So that's how you're going to take a loss. So if you're still doing dumb shit, owing to the fact that the market can still take from you even if you're right, do you know you're just going to lose so much? And that's why you need a trading system, something that shuts out the dawn, doing dumb shit. And you are left with only 2 kinds of losses: when you're absolutely wrong and when the market simply just takes from you. So you see, by default, we are designed to lose money when we trade. That's it. By default, we're designed to lose money. The game is rigged from the start for you to lose money. So Euro USD currently we ran buy side liquidity here, previous weekly high, and on the daily time frame, which is very interesting because I want to see this as a Taurus soup. But currently we have this daily gap here and market is still dancing around it. Okay, so what I'll be expecting on Euro USD next week is I want to see if we can stay below this daily candle. So if Euro USD is, we want to see both bearish Euro USD and bullish DXY. I want to see the markets absolutely stay below this, a closing basis below this candle. Maybe a retest. It's not important really. The retest is not important, but I want to see the markets close below this daily candle because, in as much as the high time frame drawn liquidity on euros is bearish, currently we're seeing bullish price action, and we can't discount all of this because we could be wrong. We could still be wrong. That's a very interesting thing because while I'm talking about the fact that we want to see euros to trade here, which is where I think euros will absolutely trade. I don't want to use absolutely, but this is where I think euros is going to trade into. We can still be wrong because there are scenarios where market leaves gaps open as breakaway gap. I mean, that's the whole concept of breakaway gaps. Market leaves inefficiencies open for some reasons. So that's why we need validation. We need something to tick, in the direction of that bias and tell us that, okay, fine, the markets are willing to trade in that direction, and then we engage. So currently we are still trading at this daily fair value gap. We want to see the markets close below this gap because you see markets are currently respecting this fair value gap. And its narrative on the daily time frame is all we need to validate our weekly bias. Now it's gonna be like a long-term trade. So I mean, I can be patient for all I care. Now look at last week price action for someone who wants to study, right? You can see Monday's candle on Euro USD was bullish, didn't trade into objective, but this validates the weekly bias. Tuesday was also bullish, didn't take out Monday's low like the XY. So you can see the XY on the XY took out previous high. So that's the manipulation, the SMT between Euro USD and dollar index. Okay, while Euro is showing relative strength. And you can see then there was market structure on the hourly time frame after Tuesday's candle closure. Okay, you can see market structure. We had bullish market structure and longs on Euro USD, and that's simply how I capitalize on Euro USD on Wednesday. Okay, yeah, it was Wednesday because I had to wait for the markets to close. I had to wait for the markets to close, and you know, I had to wait for markets to close. That's So that's how I re-engaged on Euro USD into the draw liquidity here. Of course, after taking one very unnecessary loss because this didn't make sense to me. If they did this to me and traded into this low, I would maybe have myself to blame and say, oh, why didn't you wait for the relatively equal lows, and you should wait for dollar index and far time from change staying delivery. That's what I used to do back in the day. I think everyone does that. But at some point you'll just learn that you can't avoid taking losses. And there's a reason why I'm talking about this because next year we're going to do a lot of things like this on Discord, and you need to prepare yourself. Not saying you're gonna take lots of losses. Come on, you're gonna make money, of course. It'll be very easy markets for you to trade. But when trading currencies, everything gets very complicated. Very, very complicated. Currency market, very complicated. So currently Euro USD traded above the previous weekly high, this previous monthly high, into this gap. I had interest in going short here, but I think I was just laughing that, oh, this is inducement, this is inducement, this is inducement. You're gonna sell here. I just laughed. I just did not take the trade because that's not how I trade, right? I trade the weekly range expansion, and last week the range expansion was bullish, and even if I wanted to see short from here, I needed to see the Euro to validate. And at the close of Thursday's trading, there was a change saying they were on the hourly time frame, but that doesn't mean I will engage. So this week we're gonna see how the markets trade. First up, I want to see how Monday trades. Mind you, I say I want to see the markets stay below this daily gap, right? Okay, I want to see how the markets trades and stay below this gap. Currently, we have a change in state in delivery here. Currently, okay, something that is tipping to the fact that market structure is leaning bearish on the 4-hour time frame. Okay, that's what we're seeing. But in the sense of the weekly range expansion, I told you the architecture of the weekly range. If you watch my secrets to short-term trading, I need, if I want to trade the weekly range expansion, that's next week's range, I want to see how Monday trades. I want to see if Monday is showing any willingness to trade bearish. Then that becomes high probability for me, and then I begin to look for setups on the lower time frame, which I'm going to engage and aim for. We have relatively equal lows here, we have low resistance liquidity around here, so there's no rush. I want to see how the markets are trading because currently markets are in consolidation. So this is consolidation, and even if consolidations always lean into the long term or high time frame draw, but now that this consolidation is happening after markets met objective, I can always excuse price action here and wait for a new weekly range to restart and see how the architecture of that weekly range forms. Okay, I'm going to see how market structure forms on Monday. Then I want to see if it shows sponsorship or if markets are still in consolidation in form of manipulation, trading against my weekly buys. Okay, And that's how I build narrative, building high probability conditions for me to trade. Okay, and once you've built high probability conditions, the advantage is when in any scenario where you get stopped out, I mean, market takes out your stop after observing all of your protocols. That means waiting for time, because on USD, that was absolutely New York session. Okay, that was New York session when I got stopped at the very heart of New York session. All right, and the manipulation happened. So when markets were trading against my bias at key time of day, that's also a way to identify manipulation, because sessions should establish bias. Sessions should trade in line with the high time frame draw on the curve. Okay, I mean, this is one of the things I wanted to teach in the mentorship earlier this year. I wanted to teach um, time and price. I'm going to teach sessions which we're going to blend in the economic calendar. I already established, the economic calendar already on the mentorship, but I was going to amplify the economic calendar teaching sessions. But I was looking at price action and it wasn't encouraging. And you know, we're in a scenario where it will profit you to trade off of the power time frame, if especially if you're trading currency market. Okay, so I don't want to mislead folks into thinking, oh, this and that, that and that. This condition is not ideal or suitable for day trading. Okay, so that's why I skipped it. So hopefully next year I continue the mentorship series, and I'm just gonna it's just basically gonna be day trading strategies and day trading techniques. That's what I'll just be doing next year in the mentorship. All right, because this year price action is nothing to write home about, and it's not encouraging for someone who just started trading. It's not encouraging, and you can see it for yourself. Maybe someone who doesn't understand pricing or someone who gambles wouldn't see it, but if you understand market structure, if you understand, the high time from institutional order flow and see how markets are delivering in recent months, you know that this is not ideal. This is not what price action was. This is not how price action is supposed to be. I mean, it's at this point, it's looking like boom and crash. I don't know if you know boom and crash on derivative. Okay, you can see all of this consolidation here and suddenly boom. Oh boy. So I hope I was able to nail, my insights on next week's price action. Anyways, we're bullish. I'm assuming this is a torso because it's against the high time from draw on liquidity. Okay, we need to see how this week's trade. Although we're looking at the 4-hour time frame to see that 4-hour time frame is kind of leaning on bullish, but I don't want to take it for what it is. Okay, I needed last week to close completely. All right, and then last week to close completely. And when we begin to look at next week's weekly range, we want to look at it as a fresh weekly candle. Learn to visualize these things in your head. Think about it. You want to trade a weekly range expansion. So it means even if you haven't engaged on dollar index from last week, you haven't missed anything because you want to trade a new weekly range. You might miss a session or two, or you can miss a single day, but I'm sure you're going to get 2 or 3 days to make money. I mean, so we want to create a scenario, a high probability scenario condition where our models can flourish. And for that, we're going to wait until Monday's trading and see how Monday candle trades, and or maybe the London session, because we already have price action on the power time frame that leans or support bullish DXY, even if currently this is still in consolidation. Okay, so until I talk to you in the next one, be safe.